You can't escape these words in 2024.
A rental and homeless crisis, the likes we've never seen before in this, the lucky country.
There's definitely a problem for renters and investors at the moment.
But it's not a new one. When a famous visitor to Sydney observed the number of homes recently built is astounding. Nevertheless, everyone complains of the high rents and difficulty in procuring a house. Now that was
Charles Darwin, the biologist, father of evolution, January 1836.
What?
Economist Dr. Cameron Murray, author of The Great Housing Hijack and columnist at the Sydney Morning Herald, unpacks what investors need to know about the current state of the market.
Isn't that tax going to then backfire? Rents are about to fall to come back to this historical average.
here's the challenging thing.
How are you fixing the Australian housing crisis in 2024?
Okay, there's probably three actions. Firstly, some kind of limit on how quickly you can put rent up. Number two was the immigration program. It's not really the size, it's the surprise nature of it. Imagine if we just said, oh, Canberra's closed, everyone from Canberra, you have to go fit somewhere else. Third thing we're going to do is we're going to start accumulating.
Providing us with a unique economist's market perspective we rarely get a glimpse into.
This idea that we're going to build lots more houses and put people in them, that's not happening in 2024. There are 11 million houses, right? It doesn't matter who owns them. The market works. People spread out and reallocate themselves amongst those dwellings. There's less than 100,000 houses out of 11 million that you can rent in any particular month.
As well as the hard questions you want an answer to as a property investor.
This probably isn't going to be the last time we see the amount of money that's just been pumped into the system. Is that maybe an indicator that to go, maybe now's a good time to buy?
My experience has been...
If you're serious about understanding the Australian property market, from one of the leading economists in the country, get ready to listen close. And if you're enjoying the show, consider hitting that like button and subscribing. It allows us to make more content like this, where we've taken the whole pizza and property crew up to Brisbane to make it possible. My name's Todd Sloan. This is the Pizza and Property Podcast, and you're listening to my chat with economist Dr. Cameron Murray.
Cameron, welcome to the show.
Thanks for having me, Todd.
Pleasure's all mine. I want to jump into the questions straight away because I reckon this is probably going to be a bit of a longer chat. Got a bit to unbox with you.
Okay.
All right, so I wanted to kick into something that I really took away from reading your book. Historically, the average rent to disposable income ratio for a renter household has been 20%. True from 1993 to 2023. Correct me if I get any of this wrong.
No,
as well.
you're 100% right
Good.
so far.
Excellent.
Keep going.
But now in 2024, it feels like the average rents have been skyrocketing. Mm-hmm. This doesn't really feel like it's the case at the moment. For our pizza property community, which realistically, mainly all property investors, should they be concerned that rents are about to fall to come back to this historical average of 20%? Or is it more of an indicator that incomes are about to rise?
That's a great question. No one's asked me that before, Todd. I'm going to pick you up that actually rent to income in 2024 from the best, what would you call it, partial estimates we have, is actually still 20%.
Really?
Yeah. So Ben Phillips at ANU, he's an economist and a social researcher there. He's looked at all the data on the CPI measurements, the household income measurements, and his chart just keeps going as a flat line all the way to 2024. Because I think what we're missing is that it's definitely true that some people's incomes are not keeping up. But those people paying those high rents today, well, they have the income to do it. Otherwise, they wouldn't be willing to pay that to outbid you. So I think we can get a little bit confused if we look at just the bottom of the income distribution and say, hey, look, their rent to income ratio is going up, and ignore the fact that there's actually a huge chunk of households whose incomes are rising rapidly and who are upgrading, moving to better locations and paying these higher rents. So I don't think there's going to be a big adjustment in the next couple of years of rents falling down or incomes rising. I think we just sort of saw those things happen in parallel, but a little bit lumpy with this inflation trend we've had, right? So the price of goods and services went up, price of rent went up, and the price of housing all went up over a period, but slightly out of sync, so that some people sort of got left behind, some people got ahead, but across the market as a whole, it's sort of washed out. So it's across the 3 years.
The out of sync section of the market, you feel, is where that focus is left or really placed on the media and what we look at.
Yeah, so let me unpack that. So, housing's a bit tricky, right? Because it's not just like the shares of Apple, every share's the same. Houses have a location, right? And people relocate there based on their incomes with how they think they can live. But if their incomes don't change as quickly as other people's, it's very disruptive. They have to move. They go, oh, my rent's gone up 40%, something crazy's happened. And I'm like, yeah, other people's income have increased. They've upgraded to your suburb. You've been left behind, and you're sort of dropping out of this, we call it like a tournament economy. There can be only one winner. Okay. Someone has to lose. And it's these people who aren't homeowners, who are renters, whose income haven't kept up. They're like, whoa, what's happening? Right? Which is a few people. It's not everybody. It's just so 30% of households are renters. Of them, maybe a sixth or an eighth are the ones really getting left behind and dropping out. But most renters are doing fine. They've upgraded. They've got higher incomes. And so it's just, this small fraction of people left behind. And they're getting a lot of media attention, and rightly so. It's very disruptive. But as an economist, you've got to understand the market as a whole and its outcomes, not just, there's one thing bad for a small group of people. Yes, that happens all the time. We should deal with it. But it's not actually representative of the market outcome, if you catch my drift.
Very much so. Okay. So, because when we're doing a bit of research to sit down and chat with you, we were actually looking in the office at all of these different headlines throughout time. And there were some, I was going to read some of them to you, because we can go back to like the 1980s. I could read the article to you, and it sounds like a headline and an article written about today. Yeah. But then it's like Prime Minister Bob Hawke said. Yeah. And exactly. So, and this is kind of the feeling that I'm getting from you here is like, this isn't a news story.
Exactly.
This has been going on for a while.
Well, I mean, my favourite quote, you probably read it in the book or have seen me say it. Every interview I have to say it. You know, the most famous celebrity visited Sydney and said in their diary on their first day, the number of, let me just get the quote correct.
I know what you meant.
The number of large homes recently built is truly surprising. Nevertheless, everyone complains of the high rents and difficulty in procuring a house. Okay, now that wasn't Taylor Swift, and before the episode, we were talking about Taylor Swift, who was in Sydney this year. No, this was Charles Darwin, the biologist, father of evolution, January 1836. He arrived in Sydney, 20,000 people lived in New South Wales, and do you know what they were doing? Complaining about the high rents in Sydney in 1836. So you've got to think, well, hang on a minute. Is this what the market always does? I mean, the socialists of Europe in the mid-1800s, Friedrich Engels, wrote the book The Housing Question about why the working class is getting left behind with their housing in the industrial cities of Europe. In the 1870s, it was Henry George wrote Progress and Poverty, and he said, why are these people left behind when we have an economic boom? Why is there a coincidence of progress, economic growth, and poverty, people falling out the bottom? Right? New South Wales had its first inquiry into rising rents in 1911, 10 years after Australia's federation, and the first Fair Rents Act in 1915. So this is like a normal feature of property markets. Now, I'm not saying normal as in good. I'm saying normal as in we shouldn't frame the problem as we just have to make the market work better. Because the market's had 200 years to do its thing, and it's getting us the same patterns again and again. They work for most people, but those people who get dropped out, we've got to do something different for them.
It really doesn't work for them.
Exactly.
I've really been looking forward to this chat. It's actually this next question. Okay. Because, and you and I loosely talked about this on the phone beforehand. Keys to the Country. Okay.
Oh, yeah.
It's a game that I used to love playing. And from what I can understand, I think I made it up. Not sure. Maybe not. But it's a game that I used to play, drinking game with friends. You metaphorically give someone the keys to the country, and then you quiz them on all the hardest things. What would you do about this, this, and that? And when you're completely in charge, it sort of shifts to a different perspective. It can be fun to play. Wanted to play it with you.
Okay, let's do that.
Giving you the keys to the country. You can do anything. How are you fixing the Australian housing crisis in 2024?
Okay, let's think about that. I'd say there's probably 3 actions. So firstly, some kind of limit on how quickly you can put rent up on sitting tenants. So European style rent control, if your city booms, you just don't get to put rents up 20 or 30% on your sitting tenants. Okay, you get limited by CPI or some other reference benchmarks. That's pretty common. So, the Netherlands has CPI plus 3%.
When you say sitting tenants, you mean during a lease or even in between re-signing?
In between re-signing.
Between re-signing, okay.
Yeah, so I mean, that has to get coupled with provisions that if the sitting tenant's willing to pay up to the limit, you know, you have to re-sign with them unless you're moving. You know, there's usually 3 rules around that. If you move into the place yourself, the landlord, if you do an extensive renovation, or if you sell it. Other than that, you're obliged to smooth out rents for sitting tenants, right? And let me just justify why that's okay. So we do the same thing for landlords with land taxes. So land value taxes aren't based on your land value this year. They're based on the average of the last 3 years. Because if your land value goes from $1 million one year to $2 million the next, well, you'd have to pay double the land tax, right? Landlords don't like that. So what we do is we go, okay, we won't double it on you. We'll average out the 1 million from 3 years ago, the 1 million from last year, and the 2 million from this year, and you can pay land tax on 1.3 million this year. And then next year, you can pay land tax on 1.6 million, and then in the third year, it'll increment up to that $2 million. So it smooths out those unexpected cash flows.
Is that a fair comparison, though, being that land tax isn't an applicable tax for every property investor, whereas rent is an applicable income side of the equation for every property investor and every tenant?
If I'm in charge, everyone will pay land tax.
Okay, I forgot.
Look, I think it's a very effective, easy to administer, efficient tax. If we're going to raise money on the wealth of the country from immobile wealth. You can't escape it. All you can do is trade to someone else. There's no distortionary effects. Even Milton Friedman said the best of all taxes is the land tax. So everyone would pay a little bit of land tax in my world, and tenants would be stabilised to a degree when there's those sudden shocks like we're having now. And this, I think, for landlords, I think there's this distorted view of how the market works. There's I'm great, I'm a property investor, my property goes up. But actually in Brisbane, from 2012 to 2022, there was no nominal rental gain. So this rule would have just sat there unused. It wouldn't barely have stopped anyone in the whole market from getting the exact rent they got. But in these periods like we're having now, it would smooth out that adjustment across all the tenants, or across many tenants, right? So I think that's an immediate thing that will have an immediate effect, right? Because this idea that we're going to build lots more houses and put people in them, that's not happening in 2024, right? The construction sector is already at its limits, so we can't just, click our fingers and airlift new houses here, So what we do is we help the tenants that are here and smooth that out, so to stop these disruptions. So that's the first thing. I had 3 things, didn't I?
Before you think of the next, the first thing that I want, because this is exactly how the game works, is to really quiz you on it. Is you say that it's over that 11-year period in Brisbane.
Yep.
I think it was 11.
Yep.
Nothing really happened. It wouldn't have been used. Who cares?
Correct.
No one would have really even noticed it existed if it did. But then when it did exist, what about all of the property? Because let's face it, most property investors, I'm not a stats man like you the same way, but it's something like 89, 90%. Like it's the overwhelming majority only own like 1, maybe 2 properties.
Yep.
So if we're looking at more of the mums and dads buying 1, maybe 2 properties, when all of the interest rates went from emergency rates of your 2% and then all of a sudden hiked up, that means that they're still going to be wearing a huge negative loss then.
Yep.
What happens then to the amount of people that go, well, I'm just going to sell? Isn't that tax going to then backfire and then more properties go onto the market?
There are 11 million houses, right? It doesn't matter who owns them, honestly. Like if a landlord sells, it doesn't matter. If I sell my house to you, if I sell this apartment to you, no one cares. The market doesn't care. Right? So it's inconsequential apart from setting the asset price that trades in property happen. Right? As an economist, it's actually a bit of a puzzle, and I mention it in the book. Why do people trade property, right? Because the seller is getting a yield as well. If it's good for the buyer to take cash and buy this asset for the return, why isn't it good for the seller to hold it instead of getting the cash back? Like, it's a bit of a mystery, don't you think? When you think about it that way, like, why do you think this house is a better investment than me when I already own it?
I remember that part of the book, and I remember thinking, are you talking specifically about investors in that sector, or were you talking about people from a PPR perspective as well?
Well, that's a mystery as well, right? Because there should be some kind of equivalence between the present value of my future liability to rent and the present value of owning the same home right? Because that's what you get when you buy it, the future value of all the rent that someone will pay you. So there should be an equivalence there, right? Now, you can argue that owner-occupiers get an intangible value in terms of the security because they're not subject to the whims of the landlord's decision to sell or kick them out or renovate when they wanted to stay.
Yep.
So there's a little bit of value there. But but back to your main point as well. So actually, when we think about landlords selling or forcing landlords to sell when we tax them more or regulate the rents of their tenants, we also have to have in mind that if we want higher home ownership, which many people do, the only way to get that is if landlords sell, right? Because there are 11 million homes. There are 3.3 million rental homes. So if we want home ownership to go from 67% to 77%, then 300,000 landlords have to sell to first home buyers.
Okay.
Right? We're not going to outbuild that. Or we can ban landlords buying new homes and only let first home buyers buy new homes, and hopefully through the change in the composition of the stock, increase home ownership. So there was actually a comment about this in the Victorian case, because Victoria's increased their land value taxes, right, in recent years. And the landlord lobby there is saying, oh, we're all going to sell our houses. And there was a really interesting interview that one of the lobbyists said on TV. The interviewer said, so who's buying it? Are they first home buyers? And they go, yeah, mostly first home buyers. And I'm like, well, isn't that what we've been trying to orchestrate with first home buyers grants, with all these sorts of things for decades? And it turns out all we needed to do was increase land taxes and we reallocate the housing stock. And it's actually another interesting bit of that puzzle is after the Second World War, we had rent controls during the Second World War. And once the economy got back to normal, the continuation of those rent controls was credited with part of that wave of home ownership in Australia. So there was two big factors. One, those rent controls, because landlords would say, well, why would I keep this asset, right? Because I can't put the rent up. I'll sell it. And first home buyers were like, great, I'll buy it because I don't have to compete with other investors. They don't want it either. So there was that. And there was also subsidised public housing as well with rent-to-buy schemes and things like that. So we actually got home ownership up from 43 or 45% before the war to 71% by 1971. So in that, two decades or so after the war. And that was a major factor, is that landlords said, hey, housing's not a great investment anymore. But owner-occupiers said, great, well, I can avoid all those rents, have the security, I'll buy it instead.
So then where's this balance then? Because I agree with you. And when I was an agent, I used to sell so many properties to first home buyers when the boom started. I left in 2022. It was still very much in full swing. And I remember I would have very uncomfortable conversations with tenants saying, like, this property is being sold, like your lease supersedes everything. However, if someone buys it and wants to live in it, then they're going to live in it. And then if more properties are getting taken off of the rental market, it sounds like, well, then that's just kind of pushing the problem into a different direction, because then isn't there less rental stock for people wanting to rent that don't want to buy a home or can't afford to buy a home for whatever reason? Yeah,
but I mean, there's fewer rental households, one for one. That's where first home buyers come from, right? So you're taking a person out of the rental pool, turning him into a homeowner, and you're taking a house out of the rental pool and turning it into an owner-occupied home. So let's say we got 3 million rental homes and 1 million landlords sell to first home buyers. Well, now we've only got 2 million rental homes. It seems bad, right? But we only have 2 million renters as well, because 1 million of them became first home buyers. So it's sort of a one-for-one. Now, you can argue, there's a compositional effect because new households form and so on, but new households form regardless of the composition of ownership, right? People get older and have children. Doesn't matter who owns what, that's going to happen automatically, right? So changing that composition doesn't change that process, right? It just substitutes households from renters to landlords, or owner-occupiers, their own landlords.
I would have thought it would have been much a smaller percentage of the market, because I'm looking at first-home buyers through a lens of anywhere from like 18 to 35, that kind of thing. And I know the age of first-home ownership is getting older and older and older. I think in one of the Scandi countries is even like 38, like it was substantially older. But I kind of looked at that as that's one segment of the renter pool. It's not the entire segment of the renter pool.
Of course, yeah. It's one segment, but they're leaving an empty house behind, and people adjust and fill the houses that are left behind, right? So let's just say they're the richest of the renters. We've got all the renters lined up from wealthiest to poorest, and we pick them off at the top, and go, you can buy that home now,
Okay.
right? And maybe you've bought some other house out of the pool. Well, people will spread out and fill those gaps, right? The next person down will go, great, that next best house down the street's available for rent. I'll move in there, free up my home. The next person will come in behind me and take that one.
Mm-hmm.
So the market works. People spread out and reallocate themselves amongst those dwellings. So it's, it doesn't really matter who comes out of the rental pool and becomes an owner-occupier, because the home they vacate will get soaked up in the market. Number 2 was the immigration program, right?
Mm-hmm.
Now, it's been in the news a lot lately.
It's pretty big.
It's pretty big. It's not really the size that's been disruptive. It's the surprise nature of it, right? Had we known 5 years ago that 1,000 people would arrive this year, investors would have gone, I'm going to buy this ready, just like they will for the Olympics, right? Hotels will build, everyone will preemptively invest ready for that event, right? The Olympics are coming, we will be ready, right? We'll have hotels ready. It's not going to be like June, whatever the date the Olympics are, June 15th or something. Oh, guys, the Olympics are on. Sorry, you all have to squeeze in the hotels that are already here, right? We'd be like, oh, that's chaos, right? It's, look at this demand. We can't meet it. What are we going to do? Well, it's too late then, because we should have known it was coming. So anyway, it's not really the level so much as that no one expected, 400,000+ additional people in 1 year, which is a Canberra, right? Imagine if we just said, oh, Canberra's closed. Everyone from Canberra, you have to go fit somewhere else in the country. That's essentially the same thing.
Yeah. Okay.
Go squeeze in the other cities. Off you go.
Be a big cuddle.
Yeah. And I mean, all the public services, schools and everything, sorry, go fit in. Off you go. We'd be like, whoa, hang on a minute. That's really disruptive. We weren't prepared for this.
And you feel like that's kind of what's happening now?
It's a part of the story of 2023 and 2024.
Okay.
And the reason, if I've got the keys to the kingdom, I would address it because we can change it right now, right? In the next financial year, we come up with some new rules. Sorry, after June, we're tightening up these rules because we need to let the market catch up to this unexpected surge we've just had. And I think, especially in Sydney, the inner suburbs of Sydney, a lot of people arrive there. I think you'd take a little bit of heat out of the market quickly. And it's not that you need zero immigration, it's just maybe you need 400,000 people over 3 years or 4 years instead of 1 year, right? Smooth it out. You're probably catching a bit of a theme here, like rents, we should smooth them out. It's the disruption that we're unhappy about. Oh, it's the immigration, we should smooth it out. It's the disruption of this unexpected surge of, and I think, the immigration thing, people say, oh, it's not that many. We've had that many before. If you actually read a lot of public reports from previous surges in the 70s and in the 50s, they're all like, how do we house these people? There's no schools, communities are just teaching kids at the church, and then they go on Sunday and there's no sealed roads and there was no, Queensland. My dad got an inside toilet when he was 18.
Yeah, wow.
Right? Half of the city didn't have sewers until the 70s. Right? And so, maybe you can house people really quick if you don't pave the roads, have stormwater, have sewers, have power. We could do that, but I don't think we want to do that, right? We want to keep the standard and the quality of the infrastructure and the quality of life we have. And I think that means we need a slower adjustment rate. And so that's the second thing I would do. I'd wind it back closer to 100,000. I'd tighten up all those temporary visas. In practice, you could just have a quota in the, for example, student visa market. You could say, okay, Australian universities, you've had it good for so long. Sorry, there are 50,000 student visas this year. You come and bid for them at the auction every December. You pay a tax, and then you can charge the students whatever you want. But we're going to raise that money for the local people, this export. So that's one way to do it. And I think that would take the heat out of things in particular areas pretty quickly, right? You see, let me break it down a little bit more for you.
Sure.
There's less than 100,000 houses out of 11 million that you can rent in any particular month, right?
You're talking about just now, or this is
in general?
Okay.
In general, very few homes come up for rent where people are relocating each month. If we get 400,000 a year, we get 100,000 every 3 months.
Yep.
So we have to squeeze 100,000 people every 3 months into 300,000 dwellings that came for rent in those 3 months. They can't just spread evenly amongst 11 million. And it's like this squeezing everyone through this little narrow door of the available homes. Mm-hmm. And so that's where you get this sort of short-term, pressure on rents, in addition to everything I've said before about incomes in certain areas. So I think that's what you can do. Manage that queue a little bit better, take the heat off, and let everyone sort of spread out and let the market adjust at a reasonable pace.
So
is that making sense?
Perfect
or am I
sense.
just confusing?
No,
going around in circles.
The thing that I'm thinking of now, though, is when you were talking about supply demand and the way that gets kind of thrown around as, well, that's the thing. And you're kind of like, well, it's a lot deeper than that. And you go back into it. Is this the depth that you're talking about? Because to me, this sounds very supply and demand.
It is supply and demand. Here's the challenging thing. Supply and demand, people use the words to mean anything, all right? Supply means willingness to sell. In economics, you go to your first course and they go, supply and demand. What's the supply curve? Well, it's how much people will accept to sell a certain item in a period of time. It's not how many items there are, it's how many they're willing to sell this year or this month or this week. So for example, Apple shares, BHP shares, right? Supply and demand is like the offer schedule. Like the people who are willing to sell, they say, I'll be willing to sell for this much. But most of the shares never get traded. Whether there are 1 million shares or 20 million, the thing that affects price is only those ones sitting on that curve that people are ready to sell. And so when we go to housing, we go, it's supply and demand, as if it's the number of homes and the number of people. It's not. It's just that adjustment process of those that get traded. So in the rental market, it's those available homes that month and the households who want to rent that month. Right? And in the sale market, it's the willing sellers and the willing buyers of all types. Does that make sense? It's like supply and demand explains how prices adjust. It doesn't explain why those prices exist.
It does make sense.
Okay.
But if this is a supply and demand issue, and from what you're saying, it's not, but...
So it's not a quantity of homes and quantity of people issue.
It's the amount of people that are willing to rent their homes at the moment.
Currently, the activity in the market of renters and sellers, because renters are willing to buy a lot.
Sellers or renters? Sorry,
sellers of houses, landlords. Sellers of rental occupancy, we'll call
Gotcha.
it.
Okay,
So there's a lot of people who want more space, who want to upgrade, but of course there's a finite stock and there's a finite rate of new things getting in. So that does explain the adjustment process. There's a little bit more, but what's your question?
So do we need to actually build as many homes as we're talking about as the solution? Or do we need to encourage more people to rent them out?
Well, now you get... So, someone said to me the other day, I think I can solve this. We just offer a $1,000 grant to move into a share house. Anyone who moves into a home that was an empty room in someone else's house gets paid a $1,000 grant, cash. And then literally you get 100,000 people just vacate homes for a cash grant. Now, I don't think many people would because, rents in Sydney are $1,000 a week. Yeah. Right? It's not a huge amount, but you understand what I'm saying. That would then immediately create some homes that, well, now I've got to participate in the market as a landlord again and get them from being just in the stock to participating in that exchange of, the rental market.
I feel like that it would, I don't know if it would solve it, but I feel like that would help because didn't the average persons per dwelling used to be like in the 50s, like 4 point something, and now it's like 2 point something. Like it's pretty much half, isn't it?
2.4, 2.5 at the moment. Yeah, so it's about half.
So if that could get closer back up to 3.
So what's interesting is that, it's still near record lows. What's interesting is that chart, people per dwelling fell during the 90s, fell all the way up to the financial crisis, and then it actually went up from 2007 to sort of 2014. And then it's been coming down again for the last 10 years. So it went up from 2.55 to 2.6, something like that. Mm-hmm. And it's back down at around 2.5 now. But what's interesting is in the 2010s, rents weren't a big deal in most places, yet people were consolidating into fewer homes. And I think that's a product of, again, it's part of this adjustment process. People's incomes were falling, right? So they not only could they not pay more rent, but they actually consolidated their households and people stayed in share houses for longer. children stayed later because, I haven't got my good job yet. And so that naturally happens. But anyway, the long-term point is I don't think we're getting down to a European-style 1.8 per dwelling because our dwellings are enormous. That would be kind of weird to have that mismatch across the market. Despite aging, I don't think that will happen. Anyway, so migration is just this temporary effect. Now, it's not... So just let me wrap that one up. If migrants could just shift into any house that existed, all 11 million were actively for rent, and everyone could negotiate with everyone to squeeze in one person every extra 20 dwellings, it wouldn't be noticeable. But that's not how the market adjusts. The market adjusts via those 60, 100,000 per month. And that's why there's so much pressure in the rental market in certain areas, right? And over time, people will filter through into all the households as they come up for rent.
Right.
So if we take that pressure off, that filtering adjustment process can just happen more smoothly without that big queue at the door.
So your government's capping rent or controlling rent?
So it's regulating the rent increase to CPI plus a few percent, something like that.
Okay.
And we're going to put a quota for temporary visas for next year. And what's the third thing we're going to do? Third thing we're going to do is we're going to start accumulating stock in a non-market housing system. So the first thing we talked about, remember, was there's these people that get left behind in the market in the 1830s, the 1870s.
Yep, it's
They
just
always seem to
happen.
get behind, right?
Yep.
So the question is, well, should we have an option that's not market priced so that people don't have, you don't have to compete someone else to stay where you are? Like if I'm renting in the private market, I have to compete when my lease is up with anyone else who wants to live in this place, right? So should we have some kind of non-market option? And we used to have a lot more public housing. So in the 1960s, it was like 15% of new dwellings.
Yep.
For 20 years were public housing, and a lot of that got sold off with rent-to-buy schemes for tenants. So a lot of, Australian families got their start in home ownership because the government sold them the house that they were renting at a discount. Some social housing people say that's bad, the government sold off, their social housing. I'm like, well, it's good because it's the same tenant lives there. They just own it cheap instead of renting cheap. And if we just want them to occupy a house cheap, does it matter if they own or rent?
But that
Not
wasn't
really.
always the case. Like I bought some of them, and I've got an investor that's been on the show before that's bought about 50 of them.
Yeah, they're great investments.
Yeah, but
Yeah.
that's what I mean. Like I kind of always looked at it through the lens of why didn't they keep them?
Well, here's the thing. Is the government trying to achieve owning lots of homes, or is the government trying to achieve getting households basically secure home?
Secure
housing?
home.
Okay, so you can do that by renting it to them at a discount or selling it to them at a discount.
Then
Right.
why sell it to me? Or why sell it to my mate that's got 50 of them already?
Are you saying these guys are buying from the public housing provider?
I actually bought from, so that the way that the scheme worked in South Australia.
Okay, yeah.
First one that comes to mind is for 45 days, it had to be eligible for someone that fit the criteria. If no one bought it within
Okay,
45 days, anyone on the open market could buy it.
Yeah. The previous public housing schemes weren't generally sold to the open market. They were offered to tenants on a rent-to-buy arrangement. Right?
Okay.
So that's where I'm saying, look, those tenants bought the house they were renting at a discount, so it's providing the same benefit whether they rent or own. Yeah, selling off the asset into the private market for cash to go and build more public housing elsewhere, that's a real modern approach. It's a real puzzle to me that this happens. I'll give you an example. Land and Housing Corporation in New South Wales, they own all the public housing stock. And they keep saying, we don't have any money. We've got to sell off housing so we can build more houses, right? So they sold off houses at the Rocks in Sydney and the Sirius building, right? If you remember, I think they got $500 billion, was it? They got sold. You'll have to come up with the price. It was hundreds of millions,
Yeah.
right? I think they're selling each apartment for like 17 million now,
Yeah.
refurbished.
To me, that always made sense. It's
Yeah.
like you can either house 100 people
Yeah.
here or like a million, well, not a million, but like a lot more people
Yeah.
elsewhere.
So that makes a bit of sense in Sydney. But what's always been puzzling is that the public housing provider has more money than anyone they're selling the houses to. Like, why are you selling the asset if you don't need the money, right? Because let me explain. Their balance sheet, Land and Housing in 2012 was $34 billion. That's what their assets were worth. In 2020, it was $54 billion or thereabouts. So essentially, They gained $20 billion just from owning property in New South Wales in 8 years. And then they're saying, we don't have any money, we're so poor, we need to get some guy with a balance sheet of 20 million to develop housing for us. We need to sell these things to someone else. I'm like, just borrow 10 billion, right? You'll
Why
still
are
be
they not?
I don't know.
I thought it was a funds issue.
It's they sometimes they're politically constrained in their borrowing, for example. So it seems very suboptimal to me. Like, I often explain the puzzle of public housing, that this whole idea governments don't want to own housing. I call it the magic suit, right?
Okay.
So you work for the public housing provider, you put your suit on, you go to work, you go, oh, housing in Sydney, public housing, so expensive. What a terrible cost on the people to build and own houses in Sydney. Then you take your jacket off when you get home, get on the phone to your mortgage broker. Oh, can I have another $1 million to buy a house in Sydney? It's the best investment ever. You know, there's nothing I'd rather do with my money than spend it all on a house in Sydney. And I'm like, well, hang on a minute. Put your coat back on. You said it was a terrible cost burden, right? And then you take it off, and apparently it's the best thing you can do with your money. Which is it, right? It can't be both. And so it's this weird logic that once the property's on the public balance sheet, we pretend it's worth zero, and it's just all cost, right? But when it's private balance sheet, we're like, oh, this is how I make my money, capital gains. That's where the returns are. It's this weird puzzle, and that's why the modern view, and defence housing does it and everything else. They go, oh, we're going to develop this thing for the Defence Force, but we have to do these leaseback sales to investors. I'm like, why? You guys have so much more money than any of these people. Why would you give them, like, they're only buying it because they think they're going to make money. If you kept it, you would make the money you're giving them to make, right? I don't understand.
I always thought the issue was a funds issue. I thought it was just we didn't have enough money, we didn't have enough labour as well to actually get a lot of it done. But labour's more the question now rather than then.
Exactly.
But
no, it's just a political will. It's just we don't want to own stuff, we don't want to manage it, we don't want to be accountable for things. If we can privatise and lease back or something, we'll go, hey, we're done. You know, we're great.
If they don't know how to build a portfolio, there's a few episodes they can listen to on the show.
They should.
We'll
they
help
should.
them out.
Go and listen. Click here. Yeah, no, exactly. I mean, they do though, right? Like a lot of these public agencies. I mean, it's the interesting thing about the New South Wales Land and Housing. This Miller's Point sale they were trying to do. They planned to do it in 2014. They had to remove all the tenants and rehouse people. Obviously, they have lots of cost burdens that private investors don't have, right? Dealing with their tenants. But that got delayed 3 years, this sale. And they thought they were going to get something like 400 million. They spent all this time trying to relocate people, dealing with protests. You can't privatise this. So they sold it 3 years later and got something like 700 million. They literally made 300 million by being incompetent and waiting 3 years because they own really good assets in Sydney. So it's just, it's a puzzle to me, right? Oh, we're so poor. I'm like, you literally made 300 million by accident because you weren't good at doing your administration. Anyway, King for a day, the third point is somehow shift this way of thinking back into actually, you know, governments don't have to physically pay the carpenter, right? They can just say, hey, Lend-Lease, you've got 60,000 projects in the pipeline. We want 5,000 dwellings in the next few years. You nominate which ones you'd be prepared to sell out of your pool of projects, and we'll cut you a deal and we'll de-risk it for you by paying in installments. Are you interested? Right? You just buy it off the market, or you can just buy it during a downturn. I've actually proposed during COVID. I said everyone was panicked, right? No one's going to build a house ever again, right? And I wrote this article, A Central Housing Bank. So during a downturn, the central bank buys assets to keep their prices up.
Talking about quantitative easing.
Yeah. I'm like, buy off the plan apartments now, right? Get those contracts in, and then when things pick up, you'll have owned at a discount because you bought when everyone was panicking, right? All these things coming out of the ground now will be public housing. And you didn't have to do anything except sign the pre-sale contract. So anyway, so the third thing is somehow build up this stock and give people an option outside the market, especially renters. And you can start that with, in Sydney, they're doing it for teachers, nurses, firefighters, police, etc., in really expensive suburbs. You can start it however you want with who qualifies for this, but I think if you try and keep it nice and broad, you get buy-in from the middle class. It's, oh, yeah, okay, so actually I could be a teacher and still live in Sydney, right? Then I think you go a long way to solving that problem next time. So next property cycle, when those few percent of renters are getting outbid, maybe instead of 4% of people, it's 1%. You know, and it's mostly solved because you've got all these people in their secure public homes. So I'm pretty agnostic on how you implement it, but all the cities, so in the book, The Great Housing Hijack, I looked at cities around the world and I said, who's not having a rental crisis? Cities with huge stocks of social and public housing where the rental price is regulated, they're the ones not having such a big problem. And Singapore's a good example. It's nearly 90% are housed in public housing, and that public housing is not rental, you buy it. So once you're 21, you can qualify, you can get a loan using your super, you can buy public housing at a super discount, and then you can trade it in the market.
And this is similar, if not the same, as the proposal that you were putting forward?
Yeah, so my proposal is just take the best ideas from there
Yep.
and implement it here. And I mean, it should be easier, right? Singapore, there's no land there. Everything's got to be high-rise, super dense. Here, you can just do subdivisions wherever you feel like. Go and put some townhouses out in the suburbs. So physically, I think it's quite easy, but you want to copy the economic design of the system of who qualifies, how they trade, how they get access to it, and at what price. And I think, yeah, over the long term, building up something like that means next time we're in this cycle, renters are sort of protected in the private market. A lot of renters are out of that market in the public market. Hopefully we don't have to have this conversation again next cycle. That's where I get to. I mean, if it was easy, everyone would do it, right?
It's already done.
Yeah, but that's where I get to, I think, on workable things.
Because right now, like the media narrative seems to be, it's very supply demand, greedy landlord. It's all greedy landlord. Something I hear all the time.
Yeah.
But I'm kind of hearing from you, it's more of a political issue with a really big question mark around this. This actually isn't like takes to be a brain surgeon to work this one out. There's a lot of, well, yeah, actually it could be done. This is how it could be done. It's just not being done.
A lot of the talk is it's a supply issue, what's gone wrong, which is weird, right? Because rents didn't go anywhere for 10 years and they went up globally in the last 2 years. So you're like, well, hang on a minute. Where did all the people come from? Right? What happened globally? Somehow we just don't have enough houses magically in 2023 when we had enough houses for ages. No, I think we've got to understand the cycle. Look, there's an incentive for people who already own property to keep prices and rents up. They don't really want their rents regulated. I mean,
I don't.
As I said in the book,
the
Queensland Premier announced 9 a.m. Monday, we're considering tighter regulations on how quickly you can increase rents. And by 5 p.m, Real Estate Institute of Queensland was all over the news, right? 8 hours later, they're like, got a dozen reasons why it's terrible. They're on the front foot. And I'm like, wow, that's what you get. But, you know, this is the political tension underneath all of it. People who own property, the rent is their income.
Correct.
People who rent, the rent is their cost. They want lower rents. They want higher rents. What do you do politically? Nothing. The optimal thing is to do nothing but talk a lot about how you're going to fix both people's problems. So in the morning you go to the property industry breakfast and go, don't worry, we're keeping demand up. You know, people will buy your stuff. Don't worry, we've got it sorted. And in the afternoon you go to the Renters Association and go, don't worry, we're going to update the rental laws. And all it says is you can change the rents once a year instead of once every 6 months. And I'm like, okay.
Isn't that what we're doing
Was that really an issue for anyone?
Yeah. It's like the rent bidding thing.
Yeah.
Rent bidding was you were never allowed to hold like a Dutch auction, or actually I think you called it an English auction in your book.
So the English auction is what we do at auctions.
Yeah.
You call out your price and you go up.
Yeah.
And the Dutch auction is where you go back and you go, oh, anyone take $1 million for this? Anyone take 900? And the first person to go gets it. So you don't get to see everyone else's bids.
Right. Okay. So it is. I have been calling the right thing then. Yeah. So it's more of a Dutch auction kind of a system. But that's if someone is saying, "Hey, this is this behind closed doors, like the best of a buyer expressions of interest." But if someone just says, "Hey, I'll give you $50 a week more. I really like this," then
What are you supposed to do?
Well, that's what I mean. That's not a Dutch auction. That's
No,
like,
it's an
okay,
offer.
I like more money.
Yeah.
Like,
No, I wrote that in the book. I said, this is what you end up doing. You end up doing non-effective policy change. Now, it's true that, as a buyer of homes, going to auctions a lot is a costly process. So the process itself is difficult. You're getting inspections and all these things, and you don't know if you're even going to be in the ballpark, right? So it's costly on the buyer side at an English auction type thing. But if you have a fixed price, so a fixed price is kind of like a Dutch auction. The first person to pay it gets it, or the first person to get close enough gets it. At least then if you go and inspect a place and it says $1,000 a week, if you offer $1,000, you get it. There's no like, oh, am I going to get it? Should I bid here? Should I put an offer in here? Like it streamlines the process for the buyer. And I think that's fine, but it doesn't change the price, right? The person who is willing to pay the most, like if people were willing to pay $1,200 a week and you advertised at $1,000, took the thing, well, your agent's really bad. They should have advertised it at $1,300 and waited for someone to offer close to it, right? If both of these auctions converge over time to getting the same rent, whichever process you use, once you start getting good at it, you get the highest bidder paying the highest rent. So yeah, you're right. It's a bit of a puzzling thing that became such a high priority when, do I want to negotiate the rental contract in a different way, or do I want the price to be lower? Like, I'll have the lower price, thanks.
coming back to what you were saying about kind of do nothing but make it seem like you're doing something.
Exactly.
Tick that box firmly.
Well, that's why it's called the Great Housing Hijack, right? Our debate is all about this this game of appearing to do things and not talking about whose interests are really what. Like, we have this idea, for example, the Real Estate Institute will say, oh, if you regulate rents, that'll backfire and rents will go up. Have you ever heard that? Oh, if rental regulations make rents go up. I'm sitting here going, hang on a minute. You make money from rent. There is a way for you to get more rent by enacting rent controls because they backfire. You don't want more rent. Why aren't you lobbying for them? Like, if it was true that it backfired, you'd be like, oh, get us rent control. It helps tenants. But you'd be like, ha, 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 it actually backfires and we get more money. But you're not. So that backfire is a lie. The reason you're so against it is because it works, because you get less money. If it didn't work, you wouldn't argue against it.
I think
you understand.
I definitely. Honest feedback from that as an investor is got more to do. Well, it has more to do with a large increase. So, like when that first came out, like I remember actually negotiating lease renewal with some tenants. And I remember being told by the property manager, "Hey, this might be coming in. Things might all get capped." And it went from, oh, okay, well, they're great. Love them, but let's just put it up, whatever it is. And it was more like Todd, if you can't put this up again for another year, 2 years, I'd actually advise you go to X. We put it up the absolute maximum we could, because in my eyes, it's like, all right, so potentially rates are going to keep going up. This is going to keep happening. I'm going to be stuck. So we're not just putting it up that little bit anymore. We're maximising the hell out of it. Now we've got this huge jump. And when you talk about smoothing things out, it doesn't smooth it. If you've got the opportunity to jump, you're jumping as far as you can.
Well, here's the thing. Why couldn't you also jump if there wasn't a rent control coming in? Like so you've said, oh, this thing might be coming, so I'll put the rent up more than otherwise now, right? What if I said, the future is uncertain, you should put the rent up as much as you can now? Why didn't you already do it? Like, what gave you that power? I mean, they could have changed their mind and you put the rent up and it'd be like, well, hang on a minute, I'll put the rent up, and they didn't even enact it. Like, where did I magically get that power to put the rent up from?
With the ownership? That's where the power comes from, I guess.
Well, yeah, but you can only put the rent up what the market will bear, right?
True. But then,
and so why is the market bearing more? Because some thing in the future may or may not happen.
I guess it's probably fear on my side then, really. Because
but why is the tenant willing to pay it?
Because it's the market rent then. Because they're looking
so
at
it was the market rent.
Yeah, so
in general.
Basically it was about me going, I probably would have been happier giving them less of that, but we're going to push it as far as we can now, because I might not ever be able to put, or not never ever, I might not be able to push it again for 2 years.
Yeah.
So that's...
I mean, that all washes out. So if you're slightly below market rent and this is coming in, well, you push it up to market rent, right? But across the market, everyone converges to the market rent every time there's
20%.
turnover, right? So yeah, some people might go, oh, you're a loyal tenant, you've been here for a while, but sorry, if I'm never going to put the rent up on you again, let's do it today. That's fine. That will happen. That's not that many people, I would have thought.
So you reckon that's one of those it comes out in the wash kind of
comes
things?
out in the wash pretty quickly, I would say. Yeah.
Okay. All right. I already feel like we've been on this one way longer than I thought. I've still got like 8 questions.
Oh, well, we should do some rapid fire maybe.
All right. Let's rapid fire onto this one then. So Victoria.
Yeah.
Victoria is currently, in my opinion, one of the most unfriendly investor states. Now, whilst also being one of the lowest performing for property price growth at the moment, throughout the property or through a property investor's eyes, I feel these two things are potentially correlated.
Yeah.
As an economist, do you agree or disagree? And if so, could Melbourne be repealing all of its, I'm going to say anti-investor, I'm doing air quotes for everyone on Spotify and iTunes, anti-investor changes, or do you think other states will follow suit, slowing the price growth around the country?
That's a really good question. So part one, yes, raising land taxes will reduce the willingness to pay of certain buyers in the market who have to pay it, right? And so, I mean, that's one reason people say land taxes are good, because it keeps prices down, right? Instead of bidding up the price and paying the landlord that amount, you pay the public collectively a share of that, right, in an ongoing land tax. So yes, that's certainly having an effect. So, and again, this is that trade-off between, it makes it a bad investment. That's right. That's why prices aren't going up. Right, that's the whole point.
But from what you're saying from keys to the country, it's like that's what you're trying to achieve. Let's get some stability.
So I think that's completely reasonable. Will other states follow? That's a good question. ACT did this, so they've started in 2010 maybe, or 2012, a 10-year land tax transition. They simplified a bunch of taxes, and so it's basically done there, and everyone's fine with that. And ACT prices are a bit more stable than elsewhere.
It's kind of ironic because you don't even own the land in the ACT.
Oh, maybe we should talk about that. The 99-year leases.
Yeah, they first ones came up like 2 years ago, was it?
Yeah, that's right. So the ACT was created at Federation 1901. No, 1911 was the first leases. And that was how they funded the state, right? They'd sell off the land and they'd use it to build the public infrastructure, and they'd get rents on the lease as well. And so the 99-year lease, at the end of the day, it is a property title is just a record in a database, right? Yeah. And one of those columns says expiry date, and the 99-year lease says 99 years, and the other says don't know. Okay. That's the difference, right? Yep. And the other difference is in the ACT, if your 99-year lease comes up, it's not like you have to buy the property again.
What does actually happen? Because I don't know.
If the territory government can take it back if they have a justified reason to reclaim ownership, so there's a bunch of reasons why you can reclaim that after 99 years, which they're not going to do for residential. But
they could. But they're just
legally you could. But do you want to stay in the government?
Yeah. Okay.
And so what's happening is they have a $264 fee.
Okay.
And you get another 99 years.
Right.
So it's basically a perpetual property title with a 1 every 100-year $260 fee.
There you go.
So I'm like, that's equivalent enough for me. I don't think that changes anything in practice.
So you'd buy in Canberra?
Would I buy in Canberra? Yeah, I'd buy in Canberra if the return was okay.
Okay.
You want to buy after a government has tried to slash and burn the public service, because Canberra is very much tied to the public service in terms of its property cycle. So when a government comes in, they're like, yeah, we're slashing and burning. Everyone leaves Canberra, relocates their family. Okay, now's the time to get my pension and move back to Melbourne. Mm-hmm. Buy in Canberra then and wait till the next government's like, oh, we need to hire all these people to move to Canberra. That would be my logic. I haven't planned to do it. But it's very sensitive to the political cycle.
As far as the lease side of things is concerned?
Wouldn't consent at all.
Wouldn't consent?
Not at all.
Okay, interesting. And so on the Victorian side then, back to the original question, because I've sidetracked us there, Cam. You think the rest of the country will potentially follow suit? You're saying Canberra's already put it in place. It seems to be working there.
Yeah. Look, I don't know politics. It's a mystery for me. I've tried my best to understand politics. I even wrote a book about political favouritism. I don't know if you know Rigged, How Networks of Mates Rip Off Everyday Australians.
No,
my whole
I haven't read that.
My whole PhD was in loyalty games and group formation and how groups steal resources off people outside their groups. I wrote a computer game and got students to form groups and steal money off other students in a computer game. Anyway,
Right.
so despite all this effort trying to understand politics, I think I've given up, and I admit that sometimes just random things happen. I think Victoria was just partly like that, right? The huge spend during COVID, they've got this suburban rail loop and a whole bunch of other things that are just like soaking up money and resources. And I think
the big rail project that's going to like 2080 or something. It's got like the massive, like the largest timeline I've ever seen.
it's a bizarre place. Like, build a train to the airport. Forget all this other stuff, right? There are things that get used, right?
Yeah.
Every city that has a train to the airport gets used. Like,
Yeah.
it's not a mystery, but for some reason they've got other priorities. So I think there was a little bit of chance involved that they'd politically wedge themselves into committing to things, and they're like, oh, we need money, and someone's like, well, there's land value tax, you know, you can't avoid it, just go and do it. They could have ratcheted it up slowly, a bit more like the ACT, but hey, if they stay in government, it'll probably stick. I'm not sure if other states, Queensland and New South Wales, are ready to risk that. In Queensland, so we're here in beautiful Brisbane, we already put the royalties up for coal. Was it the year before last in the budget? I'm not sure if you're familiar with that. It's very controversial here.
I remember it's been very small. I've seen a bit of research into that, the percentage that we actually charge a lot of the companies, and especially with gas exports as well.
Yeah.
Fractional compared to Scandi countries, which then fund a lot of their public system from that.
Correct. So what Queensland did, they just announced it in the budget, and they said so the coal royalty was 2 tiers. It was 7% on the first $80 or $50, and that was 15% on the next, whatever it was, $100, right? So it was like your income tax. You get a higher marginal rate. What they did is they added 3 more higher tiers, right?
Okay.
So instead of 15% being the highest, they added another tier at 22, and then another at 30, and I think the highest was at 40% if it's over 300 Aussie dollars. These aren't the real numbers.
Yep.
Go and look them up.
Okay.
They did that the year that the coal price went over 500 Aussie dollars, right? So they made $8 billion in Queensland in 1 year just from extra coal royalties.
It's huge.
It's huge, yeah. So if you watch the TV up here, you'll see the Queensland Resources Council advertising, you know, look how many royalties we're paying. It's, you know, it's terrible for the industry. And they've got a graph of Queensland royalties and New South Wales coal royalties. Queensland is massive. And I actually think that advertising backfires, because I'm like, aren't we good? You're paying us all this money. New South Wales is not getting anything. Anyway, that's their pitch. So it's kind of controversial. I think in Queensland, you know, there's limits to how much of these, what we'd call resource rents or rent taxes, you can do in any particular period of time. So I wouldn't have thought there'd be an appetite in Queensland.
Plus, it sounds like they're not in the same kind of need that Victoria's in to be able to go, we need to raise these taxes.
Yeah. So I think that budgetary pressure's not there. So Queensland's spending money because they have the royalties, right? So, for example, I think in the federal budget announcement, there was this $300 per household electricity rebate announced. Well, the Queensland government, 3 weeks earlier, had announced $1,000 a household or something, right? Because they're like, we got this money, we've got to buy the next election.
Yeah.
So yeah, you're right. There's a different budgetary situation in Queensland, and they've already done that. And the other interesting thing about Queensland is the council rates aren't capped. So in New South Wales and Victoria, councils can't just keep raising money for themselves, whereas in Queensland they can. And so property owners already pay more in rates, which are kind of a land tax anyway, and it stops the state having to fund other council activities as well. So yeah, don't know about New South Wales though. That one's up for grabs, and I don't follow the state politics enough to have an opinion.
I've got one that we paid $12,000 a year in council rates, which was
in
Cairns.
Queens? Oh yeah.
Yeah, it's a block of 4 units.
Yeah, that's not unreasonable for 4 units, is it? $3,000 each.
Oh, jeez, compared to Adelaide. But anyway, I won't open up that can of worms.
Oh, it's cheap in Adelaide. I might come down and buy
heaps
some houses in Adelaide. Yeah, look, I mean, also different councils cover different things in rates as well, right? So sometimes it's hard to compare.
And you cover it all in. But I'm complaining, but it's a first world problem to complain about. So it's one of those things.
Look, for me, you know, I think I'm at that point where I don't mind paying. If it's a good council, things work, it's easy to deal with.
You get something for it.
Yeah, so Brisbane, I pay rates in Brisbane, but do you know what? If I call the Brisbane Council, I can get them on the phone right now, literally. Within 20 seconds, someone there will answer my phone and solve my problem. And I always give the example, would you rather call the council or Telstra? I'm like, the council's going to fix stuff. Telstra's like, it's give up.
Have you tried calling Combank?
But the Brisbane Council, I'm not kidding. It's 3403 888. I know it because you just call it and things happen. It's an amazing thing. So I'm like, well, things work. The parks are really good.
It is beautiful.
If there's I call, I say, there's a dead possum on the road. And they go, okay. 2 hours later, it's gone. Right? My dad, there was a tree falling across the bike track, calls them up. Send us a photo where it is. He's like, okay. Walks home, turns around. There's guys with trucks removing the tree. So all I'm saying is, it's good when it works, and I don't mind paying a premium. But when the council's dysfunctional and you're paying your 12 grand, I'd have a problem with that too.
So as far as every other state maybe jumping on the same Victorian bandwagon and investors being concerned about it, I'm hearing the risk of that's pretty minimal.
Yeah, I can't look. If there was a domino effect of this, I'd be super surprised in the next couple of years. No, and there's a few elections coming up. I'm fine to be surprised. I wouldn't bet on it. Yeah.
Okay. We've just been through, I was going to say arguably, but I think factually, the third largest property boom in history. Pretty sure the first was World War II, if I've got my stats right. What I wanted to know is our rapid increase in property prices due to the rapid influx in money being put into the system due to being a part of a fractional reserve lending system and quantitative easing, or have we just experienced a property boom?
It's a good question. So let me pick up on a few things. I reckon the 1880s boom was bigger.
Okay.
So I don't know if you remember in the book.
No.
People were making, 400% in 9 months type stuff. It was off the charts.
Okay.
So the 1880s Victorian land boom was a classic.
That's
anyway.
the fourth largest boom.
Yeah. Okay. Anyway. I'm sure if we looked, so the 1800s, there were 5 major land cycles. So tracking the land cycle was, what economists did in the US and Australia in the 1800s. That's a bit of colour for the listeners. Go back and read your archived materials on that. I think you're right that the current boom is because we've got a lot more money, right? The yield on property is much the same as it was. Right, so the rental income divided by the price. But we've had this money printing during COVID, balance sheet expansion, we call it. And so that's why we got inflation, rising rents, rising incomes, rising prices, all happening together. So I think, a lot of this current boom is just a global inflation event. It's a repricing of all goods and services and assets. Which I don't think really was the case in the 2000s boom. I think the 2000s boom was more of a repricing of assets to the 1990s low interest rates. So we had the 80s boom, the recession we had to have. And we never really, interest rates came down a lot during the 90s. And I think they went up for about a year in 1996 and then came down. And so we never really had the boom to adjust to low interest rates. We had high interest rates in the 80s and a boom, then a recession in the 90s. And we're like, well, actually, interest rates are really low now. I think they're going to stay low. We can bid up asset prices, or we can leverage into property. So I think that's a big difference between the 2000s boom and the 2020s boom is, yes, the low interest rates, the 2% mortgages were a big factor. But also the fact that rents have increased have meant that yields are relatively flat. I don't know if you follow SQM research. Yeah, if you look at their gross implied rental yields, you'll see there was a bit of a dip during COVID, but the high rents, rents have increased faster than prices in the last couple of years, and that's sort of closed that gap. And now we're, 4.5% yields in many places, over 3% for detached houses in most cities, which was kind of like the second half of the 2010s. So you understand. So everything's kind of washed through. Everyone's globally's had some inflation, and so it's lifted incomes, consumer goods and services prices, and property prices.
I feel like there's still some yield compression around Brizzy, Adelaide. You used to be able to throw a dart at a map of Adelaide and get a 5% yield. Now it's not quite that easy.
Yeah, you're right. When I started buying property in the 2000s boom, it was if you can get $300 a week rent, you can pay $300,000.
Yeah, roughly 5%.
5%, yeah.
Yep.
And that's basically what we did, right? But yeah, it is a bit trickier now. Let me think about that for some examples of property I know. Yeah, you can't quite get 5% at the moment, but I think
You can, just not as easy as you used to be able
not
to.
as
Yeah.
good quality.
Correct. Yeah.
One.
You get 10% plus if you want to go to Broken Hill.
I mean, what does it mean then, that 10%, right?
Correct. How much risk
the
are you
the risk and the capital risk is very high. Yeah, I think you're right. But Brisbane was abnormal, I think, in this boom because we had very little activity in the 2010s in terms of price growth. Literally, I was looking at an apartment for rent last week. It was rented for $1,300. It's on the river in West End in 2012. They're asking $1,300 today. So there was not much activity for a decade.
And that's the common thing that I keep hearing from property managers, and it almost is irrelevant what state they're in when I talk to them. We recorded one just the other day with Sam Eaton, and she was saying the same thing as when I'm talking to Trove in Adelaide, or it doesn't matter where. That top end of the market's not really moving too much. That bottom end of the market, it's skyrocketing.
Yeah. Everyone's got to squeeze in those ones that they can actually afford.
Yeah.
Although there was a queue at this $1,300 a week apart,
maybe it's on the move.
unexpectedly,
Yep.
and I didn't think it was worth it. But look, so I think, every cycle is slightly unique, right? But there's then a lot of commonalities as well. And I think the difference this time is the inflation compared to last cycle.
Well, then, to put it bluntly, is our property market just a product of fractional reserve lending? The fact that we've come off the gold standard?
Not really, because all the biggest property booms and busts were in the 1800s on the gold standard.
Makes sense. Okay.
Right. And secondly, so fractional reserve's not really a good description of banking, right? So, for example, European banks have zero reserve requirements in many countries, like the Swedish krona and things like that. So the way to describe banking is, we can expand the balance sheet elastically at the prevailing interest rate. So as long as there's willing borrowers who are seen as able to repay at the prevailing interest rate, banks can lend indefinitely at that interest rate, right? So there's no reserve requirement constraining it. But it is true that money creation, the process of lending, and property cycles are intertwined, right? They go together because people borrow money to buy houses, right?
Yeah.
And borrowing money from a bank creates more deposits in the system of banking. So every loan, right, expands the balance sheet of the bank. It creates more deposits, which you give to the seller.
Yeah, their debt is asset, or our debt is their
Correct.
asset. Yeah.
So the seller gets the new deposit and you get the new loan, and it's expanding the balance sheet. It's extra money. And depending on what they do with it, that circulation of extra deposits from the seller is tied up with that boom process, that economic boom, right? I've just gone and cashed in $1 million house and I've downsized. Now I've got $500,000. I'm going to start spending that money on goods and services. I'm a developer. You've just borrowed money to give to me that didn't exist. I've got more money to spend on goods and services, pay my staff. So they're intertwined, but it's actually one of the big mysteries of economics is the chicken and egg problem. What causes what? Or is there some underlying market process where people both want to borrow and buy property at the same time? Does the banking system respond to people's demand for buying property assets and leveraging into them? Or does it respond to it, or does it facilitate it, or how is that interaction working? I mean, it's a mystery. I can't tell you exactly, but they move together, and in a way they facilitate each other. I mean, if people didn't want to borrow, banks wouldn't lend, right?
But if there was a cap on how much could be lended, wouldn't that cool things?
You could restrain lending, so you can't really cap lending, but you can restrain who can qualify for what types of lending. So a little bit like the Royal Commission in 2017.
But couldn't you cap lending if you went back to a gold standard? I don't want it to. I don't think that would be great for property investing. But wouldn't that cap it?
It doesn't really cap it, no.
Okay.
It just requires you to own different assets in the bank's balance sheet. Yeah.
Right. Okay.
It doesn't really cap it.
Because and maybe I've just got this wrong. I was of the understanding that you need to hold something like 10% in reserve for how much is being lent out. So then the more deposits that come in, the more that can be lent out. But if that's not the reserve system, then it's essentially what we've got is what we can lend, which will really like shrink the amount that could be lent, which, to me, and again, I'm looking at this just through a plain logic eyes, not through an economist eyes, doesn't that limit then how much borrowing can happen?
Not really. So, I mean, Keynes, I don't know if we want to talk about old economists, but Keynes studied the banking system, and he basically said there's the gold standard can restrain an individual bank until all of the other banks catch up, and then the whole system can expand in the market.
Okay.
So, but that's true of the current pricing system, right? Because if I'm lending more than someone else, I'm offering a cheaper interest rate, which means I'm making less money than the guy here. And so the less I make, the less I can expand, and he'll catch up. So there's a bit of a not a zero-sumness, but how do I put it? The banking system almost operates as one big mushy machine.
Okay.
It's not like a bunch of competing companies. That's why you don't see lots of new banks get started and grow and prosper, because the faster they try to grow, the harder it gets for them.
Interesting.
Right?
So one of those exercise bikes at CrossFit, the harder you push, the harder it gets.
Yeah. So that's kind of why banking in Australia, at least, is particularly stable. In fact, globally, fairly stable. But the general point is that banks can elastically create credit with loans anytime.
Mm-hmm.
How they manage their own balance sheet. So currently they have things called exchange settlement balances, which is essentially deposits at the central bank.
Mm-hmm.
So every bank has an account at the central bank. They don't actually have to hold any, but if they don't hold it, they have to borrow them off someone else. And that would be true of the gold standard as well. If you didn't have the gold, you'd have to just pay to borrow the gold off someone else. Right?
Okay.
So anyway, so I don't think it's the gold standard, but yes, banking and property very intertwined and the same cycles, right? Because most lending comes from housing, right?
I think one of the reasons I'm asking is because as we move forward throughout the years, this probably isn't going to be the last time we see quantitative easing or the amount of money that's just been pumped into the system over the next... Is that maybe a bit of an indicator that people can start looking at to go, oh, maybe now's a good time to buy?
I wish I knew, Todd. I wish I knew. That's been the talk, right?
Mm-hmm.
When are interest rates coming down? Because I'll get in now, right? And refinance at a lower interest rate. My experience has been, and that it doesn't happen till everyone's given up on lower interest rates, right?
Yeah.
Because things are still plodding along, unemployment's not very high. I don't think the Reserve Bank wants to, tweak the dial, these fine little moves. Oh, we're going to drop it 0.25% because, the unemployment hit 4% or whatever it did recently. I think they'll just want to keep it steady, see what happens, and wait until there's a real sudden, collapse in the share market. A lot of businesses are like, oh, now's the time to downsize before everyone else does. I think they'll wait till an event like that to make a big move. And I was actually just talking to Catherine Cashmore, I'm not sure if you know her, yesterday, and we were discussing how likely it is that some of these bank forecasts of lower interest rates by the end of the calendar year, how likely they are to be true. And we kind of fell on the side of no, it's more likely to be another 12 months, like the second half of next year more than this year. Just because there's a lot of construction in the pipeline, unemployment's still relatively low, looking historically.
That's not what anyone wants to hear listening to this, but I think it's the truth.
Well, who's panicking, right? Are there any panic sellers?
Yeah.
I've noticed in Brisbane, a few sellers who bought during COVID. I'm like, a good time to get out, because if interest rates are higher for longer, or whatever it might be, maybe take a capital gain and avoid paying 7% on your mortgage for another 1.5 or 2 years. So I have noticed a few of those sellers coming back in, like people who've turned over 2 or 3 years ago. But I just don't see a big panic yet. We saw Telstra layoffs, but Telstra's a behemoth. It doesn't, probably relatively insignificant in the broad scheme of things. What do you think?
I'm looking at interest rates through the lens of it doesn't make sense for them to come down right now if we're still talking about taming inflation. That's just one one data point, one sort of point of logic of if we're still being told the beast needs to be tamed, why would you start unlocking the cage again?
I think you're right. I think it's too early if that's your objective. You'll be like, oh, people refinance cheap again and they'll start spending. Isn't that not what we don't want that right now? Because it's still... Yeah, I think that's a good point. We've actually seen a little bit bounce in the monthly CPI indicators in quite a few countries recently. So I don't expect a second big wave of inflation, but there might be a little bit of a bounce this year. Or it might keep going. You know, some European countries are back down in their target or below in inflation. I just don't know. It's a little bit uncharted. Every cycle's different. If we knew, we'd be making money hand over fist, but everything's a risk. I see a couple of options. One is a little bit of a bounce in inflation, and globally, the US, Canada, Australia, we wait. Or maybe inflation does come down, but we wait anyway and just say, oh, okay, we'll see. Inflation's in the target band. We don't need to drop interest rates. I don't really see an urgency. All
right, Cam, getting to the pointy end of things, mate.
Yep.
Being one of the few that actually predicted the housing boom 2021, 2022, I'm sure there's a lot of people listening right now that'd like to get your thoughts on the coming 12, 24 months ahead.
In terms of property prices?
Absolutely.
Look, I think there might be a bit of a holding pattern for a while. Some people have described it as the Wile E. Coyote moment. Like, he's off the cliff. We know it's going to correct.
Okay.
But how long does he stand there before it all falls to the ground? Now,
so you reckon there's going to be a bit of a drop in prices?
Yeah. So if we cast our mind back to 2003 in Sydney or 2017, there's a bit of a correction. It's hard to know, honestly, because what's happening now is each city in Australia is having quite a different trend. Yes, there's the big surge, post-COVID surge, but Perth is still rising, Melbourne's leveled off or falling, Canberra's falling. It matters which city you're in, but I don't see a sudden panic or a big correction. If prices on average across the capital cities are 10% lower in 12 months, I wouldn't be surprised. And if they're 10% higher, I wouldn't be surprised. But I don't think
hedging your bets there.
Well, I just don't think there's going to be a big move. I think it's going to be close to zero.
Okay.
Maybe more like 5% each way.
Yep.
I just don't see any big moves in either direction.
So
just this sort of holding pattern.
There's no big booms, no big drops.
Just a holding pattern until whenever that next global panic is, right? The next cycle. Oh, the US there's a stock market crash, or there's this, and then we're like, oh, maybe we shouldn't pay so much for houses, or whatever the case may be. But I just think it's smooth sailing, but it matters which city you're in. I can't tell you which city's going to do what, but I think nationwide, not too much moves.
Cam, we've come to the final two questions. Last question I always ask people, action step. Okay. If you were to be listening to this right now, someone's going, this is good, I like this.
Okay.
Pull out the headphones. They want to learn more about the economy, house prices, but really from that more, I want to say academic approach. What should they be doing? What's an action step they can put into place straight away?
For me, they can go to fresheconomicthinking.com and sign up and read my newsletter. They can buy the book, The Great Housing Hijack. And it's hard for me to know because I'm so deep in the weeds academically on some of these topics. I generally try and say, don't pay too much attention to the nightly news or the weekly news, and try and just look at the trends in a little bit of a longer period of time.
Turn off the news.
So just turn off the nightly news and the weekly news and just keep track of the trends with a bit of historical perspective as well. So not just, some suburb had a record price boom. Okay, that's one suburb out of all of them. Okay, that's always going to happen somewhere. Just zoom out a little in time and in space and keep an eye on the bigger trends. That's sort of how I look at things. I try not to get too bogged down.
Arguably the most important question of the entire show.
Okay.
Dr. Cameron Murray, what is your favourite pizza?
Pizza, I like lots on my pizza.
Yeah.
So I usually go with whatever the pizza place has the most. I'm just like,
so
whatever
you're
you're
in.
Yeah. Get the value, try it all. A lot of pizza places have their someone special. That's what I get.
Yeah. Are you getting it anywhere special or making it at home?
Yeah, I like trying new places. A few wood-fired pizza places coming up in Brisbane. There's one actually just across the road from my house that we have on a special occasion. It's a very nice one. What's it called again? I don't even know. La Lupa.
La Lupa.
In West
Okay.
End.
Very cool. We're going to leave links to the show notes if people want to pick up a copy of your book. And having read it myself, actually, when Bianca read it to me, I'm not going to lie. Having listened to the book through the voice of my lovely wife, it's a fascinating read, mate. And I really appreciate you coming on the show. You've got a really unique perspective on things that I think a lot of property investors could learn from.
Great.
I think there's a lot of things that some property investors, including myself, probably don't like, but it's a balanced opinion. And it's what we really try and do on this show.
Great. I'm glad you enjoyed it.
Thank you so much for coming on.
Thanks for the conversation.